Welcome back to Futures. I'm Alex Coffey, now joined by Alan Nuckman, Chief Market Strategist at BullseyeOption.com. It was a pleasure. Alan, good morning. Happy Thanksgiving week. Thanks for joining us here. I know broadly kind of your approach to markets. Utilize options to kind of gain a little bit of a leverage factor, but also risk definition. You generally lean a little bit more on the optimistic side, which I think has proven to be successful over time. When you assess the landscape here, Alan, how do you feel going into the end of the year?
Well, obviously, I'm very optimistic. It's just my nature. And yeah, we've been in a bull market for, I've been doing this for 35 years. We've had, two pullbacks. We had the .com and we had financial crisis, but those were erased, and the markets are lower left to upper right, and that hasn't changed. So you have to be extra careful, especially now after these extended moves, that you can get an unwind anytime, just like we saw in gold yesterday. For no reason, once it broke below that midpoint of that of this last price action, then it was look out below. So this is now, in my opinion, a better stock pickers market. Before it was more of a macro market, but I think there's going to be many more winners and losers with this new administration, and that means good things for traders.
I love that you say that, because the market's agreeing with you. I mean, you see that. It's not just NVIDIA, pick a couple other mega caps leading this market. In fact, you're actually seeing a little bit more volatility because those names have struggled a little bit. I mean, hey, I'm not saying they're struggling, but they've struggled relatively just a little bit, and it's allowed for these other 490 names in some combination to join the party here a little bit. And for someone who looks at markets the way you do, sees opportunity in some of these other names or those names if there's opportunity there, it allows for some of that outperformance from being creative and finding ideas. Do you have any that you got your eyes on? You mentioned gold. Is there anything in that space? Is there any names that you kind of got your eyes on as sort of maybe a shopping list out?
Well, I'm going to trade whatever markets move, and I trade what I see. I tend not to think about the big macro thoughts behind the trades, but obviously going ahead of the election, it was a very binary event, but we were looking at the crypto, and you're looking at Bitcoin trading between 50,000 and 70,000. A breakout of that was going to send it to 90,000. That's exactly what happened. Now, the miners, just like the miners in gold and the metal miners, have lagged behind. So there was opportunities in Mara, Clean Spark, and Riot. Now, they all came back to their breakout. They gave people a second chance. Riot hasn't taken off a second time yet, so that's maybe a good one. But looking at some of these gold miners, now yesterday, we have to see how the markets react. Like I said, yesterday was very important because once we got above 26.75 in gold, that was the midpoint of that drop from the top. Once we got above that last week, it looked like we were going to see a full V recovery. Well, we saw some profit taking, and again, there's so much unrealized profit in gold that everybody had tightened up their stop losses, and you know how gold is a leveraged product. You can get exaggerated moves in the futures market. And so, when it got rolling to the downside yesterday, it took out that 26.75 and it was look out below. So, but I like I like Barrick Gold. I think Barrick Gold has some gaps up above. And looking at gold, if we get a full V recovery, gold itself is going to get the measure move target is about 3,000. So if you look at something like Barrick Gold, it's at the $18 handle, or maybe even 17 now. With the recent highs at 21. So the risk reward is there. And what I follow is money flow. So I've got a special patented indicator that follows the money flow in the options market. It's not just unusual option activity, which a lot of people keep track of. It's kind of a code breaker that uses an algorithm to figure out whether it was a buy or a sell. And people are building leverage positions using options, because that's obviously the smart, intelligent money. If they're building positions using options in a large way, that means they've got a strong opinion. Is that a good way to say it?
No doubt about it. That's kind of pressing the situation, you could say. Alan, I think that's interesting you bring up Barrick Gold. I pulled it up, saw what you're describing, which is a pretty notable divergence between the performance of some of these miners and the overall asset itself. Not uncommon, but one would think if you're going to get another leg up in gold, a company that's mining the product itself might participate. Is it one of those situations, too, where these miners are a little bit more of a levered play, kind of like you see with the Marathon Digitals, et cetera, in crypto? When things are roaring, they start roaring in the miners as well. Is that what you'd look for?
I would think that they'll play a little snapback attack. I don't know as far as the leverage goes. I don't think gold miners are that aggressive. I mean, they have the gold in the ground. So if gold's priced at $3,000 an ounce, their company has X amount of gold in the ground. They just haven't taken it out of their ground vault, so to speak, yet. So, I think a lot of times they get undervalued, and they do play catch up, and a lot of it is mental as far as, the way that certain sectors underperform, and I look for those play catch up, and that's why I use in the money options, limited risk, plenty of time. You can buy 6-month options at Barrick Gold very inexpensively. In the money, my expiration break even can be 50 cents higher or $1 higher with 6 months of time. And if anything happens, a modest $2, $3, $4 move in the market, then those options will gain 100%. So for me, it's all about probability and math, and not thinking so much. Now, to get back into more of these commodities, because this used to be a futures show, the oil market, if you look at Oxy, Schlumberger, and Halliburton, they've all made a bottom. Now, let's see if this bottom holds. I have been disappointed in crude oil over and over and over again. But if you look at XLE is broken out to the upside. So maybe, a move back above 70 is a midpoint of the 65 to 75 that we've seen for the last bit. Maybe, this is for real, but the risk reward is definitely on the side of Oxy and on the side of Halliburton, on the side of Schlumberger. They've also had what I look for is bullish divergence in the fact that they made new lows, but not new highs in implied volatility. Again, using what the options data gives me, I'm not a big Greek guy, but anytime that you make new lows and you're not making new highs in implied volatility, the shorts are running out of steam, and the sentiment may be shifting, and there's a lot of built-up profit there, and those people will have to, cash in their positions. That'll feed the market higher, and then you'll see new buyers. That'll feed the market higher. So you can see a self-fulfilling, reversal. Just by looking at that implied volatility divergence is a very important indicator for me as a trader using options. Again, I'm not looking for a complete reversal going from 50 to 100 in Oxy. I'm just looking to go from 50 to 55, maybe 60.
Yeah, well said. Keeping us honest here. I probably should have said high beta, not leverage, so sorry about that. But, hey, words matter. Appreciate it. Alan Nuckman,
Make it simple, my friend. Make it simple. I've been doing this a long time. It's not that hard. Just make it simple, and there's plenty of opportunity. Making money is not that hard. Keeping the money, that's what's difficult.
Well said. Couldn't have said it better. Alan Nuckman, Chief Market Strategist, BullseyeOption.com. Always a pleasure. Let's check in on some